Hello, welcome everybody. Thank you for being with us today. We're super delighted to have Rich back for a second time. We're going to cover some information that we talked about on our last Luminary series, but we're also going to get into the weeds uh, with a PowerPoint presentation and more about precious metal investing and his company. And so we're really looking forward to that. And again, thank you everybody for sharing some of your time with us today. If there are others that after you see what you see today that might find it interesting, you're super welcome to connect directly with Rich and have them connect and share the recording of this presentation. All that is open to you and welcome. And again, we'll make sure that everybody can get in touch directly with Rich post-webinar. So another big thanks to my friend John for making the introduction. Um, and we really enjoyed working together here with Rich and his firm. So with that, let's do a little introduction, a little background real quick, Rich, and then we'll get into the meat of the matter.
Sounds good. Well, I think actually, if it's okay, I'm going to start right there with our mutual friend.
Yeah.
That's the reason we're talking over the past several months is our friend John. We'll just keep it there. But we always referred to him as the deacon. He referred to my uncle, who he met many years ago, as the beacon. And the way he looked at it is Michael, my uncle, was always kind of that steady light that he could follow, that kind of guidepost. So that's why he called him the beacon.
That's great.
Um,
I didn't know
and
that.
then
Yeah.
and then when I came along, he was the deacon, Michael was the beacon, and I was the acolyte. So I've been the acolyte now for about 25 years, and that's kind of the background story with John, who's a neat guy, and I'm glad he brought us together because he introduced me to another neat guy. My background, real quick, you all got to know me, I guess, a couple weeks ago on the last presentation, but I'm a West Point grad. Class of 87. I served in Georgia, Hawaii, Korea. I was an infantry officer, served about 6.5 years, left at the rank of captain, started doing some direct sales down in Macon and Atlanta, Georgia area. And then I got the call from my uncle, Michael Checkan, and his partner, Glenn Kirsch, who were looking to expand their business. They had started in 82. This is now 96. They're 14 years old. They wanted to grow it, and they needed somebody they could trust because we deal in precious metals. So my uncle reached out to me. He believes in nepotism. It'll open a door. But all he'll do is open the door. He left it up to Glenn to hire me. If Glenn didn't like me, I was out the same door. And then once in the door, you have to earn it. I think you all in the family office business know this. You can open doors, but you actually have to walk through and do something there. So I'm fortunate that they gave me this opportunity. I love what I'm doing, buying and selling precious metals and helping people put wealth insurance in their portfolios now for about 28 years.
Yeah, it's a long time. Good for you.
Yeah,
There's this trend opposing nepotism, called nepo babies.
yeah.
And being that I'm in the family office business, in some fashion, of course, I always thought that what's the matter with that? Right? Right. Yeah. No, I can understand in maybe a big corporation where there's conflicts of interest and all that kind of stuff. But who better than your family?
But you still have to earn your way. I mean, I've done everything here. I've emptied the trash and I've made major decisions, so and everything in between. And it's all, I'm glad I did because now I know how everything works and it's easier to make those decisions.
Yeah.
In terms of what I'm here to talk today about, I know a lot of folks will come on and they're pitching a concept or a business idea where they're looking for venture capital or what have you. We're a little different. And I think this appealed to you when we first talked that we're not really looking for venture capital. We're a 42-year-old profitable debt-free company. I don't need it. We're a family business and we're going along strong. What I wanted to bring today was a unique program. And when I say unique, it is the only one in the world. And we helped design it 28 years ago when I first got here. And it's still one of the best kept secrets, I think, in the precious metals industry. And it's certainly, I think, the most cost effective, safest way to own gold, silver, and platinum. And we do everything else as a precious metals dealer. I can sell physical metals, I can store it worldwide, et cetera, ship it to your doorstep, buy it back from you. But This program is very unique, and I want to talk a little bit about how it came about and why it's important. But the first step is making the case that you ought to have any gold in the first place. Because if you don't believe in that, then why on earth would you use this program or any other?
Right.
So if it's okay, I can kick
Yeah,
off,
let's
and
do that.
I'll
Yep.
do my best to take questions along the way. We should have plenty of time to answer everyone's questions at the end as well. But maybe if you can help me keep an eye on that as I'm going through
Sure.
the presentation,
No
and I
problem.
can answer them as we go.
Yep. No,
So,
I'll take care of it.
all right, go ahead and share my screen here. And what I'm talking about today are Perth Mint certificates or
There's
gold you can fold. Okay. Um, it's again a unique program. Perth came to us about 28 years ago and they said, listen, we have a couple problems. So I'm going to get into how we solved them. But the first thing, again, I want to do is I want to make the case for owning gold. And I think the first place you look is with the dollar. It starts with the dollar. So this is a graph of the dollar's purchasing power, if you will. So it's got all graphics and everything. But the important thing is I think you can clearly see the trend from back in the 1900s, 1913 when the Fed was created. It depends who you talk to. The US dollar has lost either 96 to 99% of its purchasing power in the past 111 years. Okay, that's not a good what do you call it? Review of the folks managing the dollar, the folks managing our currency. They've done a horrible job of mismanaging. They've done a great job of mismanaging it. They've done a horrible job of managing it. And basically, when we use the dollar to measure value in anything. I don't care if it's a cup of coffee, a college education, a new home, et cetera, gas at the pump. When you're using dollars, it's a horrible measuring stick because of this graph right here. Everything in dollar terms is distorted because your ruler, your dollar continues to change value. It gets a little stronger, gets a little weaker, gets a little stronger, gets a lot weaker. And in the end, when you use it to measure the value of something, it takes more of those dollars to buy the same cup of coffee, the same college education, the same home, the same gallon of gas at the pump. And in the end, it's a bad measuring stick. I used the example 2 weeks ago. If you take a 12-inch ruler and measure a desk, it's 6 feet long, cut an inch off the end. The next morning, your desk is 6.5 feet long. Did your desk grow? No, your measuring stick is a bunch of garbage. And
Yeah,
that's the
so it's
key.
like moving the goalposts, right?
Exactly, exactly. So it's not surprising when you look at the valuation of the Dow right now and you say, okay, it hit 40 new all-time highs last year in dollar terms, and that's great. But the reality, and this is where the distortion comes in, the reality is the Dow right now is only 60% of the way to the 1999 dot-com highs when measured in gold, a stable source of purchasing power. And I had I do a weekly video update on the markets, and I had a guy come in make a comment over the past 2 weeks ago, and he said basically, when you're a retiree and you're looking at your portfolio, what you want is you want income or growth and stability. Okay. And he said gold and silver give you neither one of those. And I took umbrance with that. And I went back and I addressed it this week and I said, listen, the dollar is what's fluctuating. The dollar is what's volatile. Gold is steady Eddie. Okay, in terms of what it can buy, in terms of goods and services, gold is doing its job. It's very stable. The dollar distorts that. Okay, so that's kind of my point
Is
here.
it distorts it because we still use the dollar to measure gold?
We still use the dollar to measure gold, and in our heads, we think a dollar's worth a dollar.
All
But
right.
dollar's worth 99% or 1% of
Yeah.
what it used to be in
Yeah.
1913.
Yeah.
That's the problem.
Yeah.
Okay. A good question. So whenever people, have doubts, in the long term, you look at this is the gold price in dollar terms. There's no question about the trend. It is the exact opposite of the dollar trend. Okay. Gold is moving up in value. It's not because gold is that much more valuable. The dollars we measure it with are that much less valuable. They're
Right.
worth less. Okay. So if you zoom out and you wonder what the gold's doing, there's no question what it's doing. It's moving up in dollar terms. It is storing purchasing power. In the short term, like you look at the dip post-election in gold for a few weeks into right up until about inauguration time, about a week and a half ago. You say, "Oh my gosh, I can worry about gold. Is it going to hold on? Are we going to a new low?" In the short term, doubts can creep in. In the long term, there's no question what's happening with gold. Um, the reality is gold right now at all-time highs is cheap and hated. Okay. And it's hard to believe that something at all-time highs is cheap and hated, but it is. Central banks are buying gold. They bought another 1,000 tons last year. That's 3 years in a row. They've been net buyers for 15 straight years. And I'll get to that in a second. The average portfolio consumption of gold for Americans or portfolio value for gold by Americans is about 2% over the past 50 years. That's the average. Right now, and for the past several years, our portfolio allocation is about 0.5%. Okay. So if we just got back to the 50-year average of gold ownership in a portfolio, you can only imagine what the gold price would do. We're not there. We're at 1/4 of the 50-year average. It is cheap and hated. Central banks are buying, and that's my next slide. So central banks are buying. Why? Because they know the problem. They created it. Okay. They have overspent. They have mismanaged their currencies. It's not just the dollar. It's the dollar, it's the euro, it's the yen, you name it. China right now struggling. Okay. And these governments have mismanaged their currencies. And the way they deal with that when they overspend and therefore cannot afford to pay their bills is they increase the money supply. So if you ever want to know where the gold price is going, just look at the money supply. If it's increasing like it is right here, gold price is going up. There is no two ways about it. Okay, or there are no two ways about it. So the bottom line, the central banks are buying gold because they understand the problem. We should follow them not because of what they did to get us in the situation, but because they realize the situation and they're taking steps to protect themselves. They are shedding dollars in their foreign currency reserve portfolios for the other tier one asset that holds value, known as gold.
And so
Okay.
their objective seems to be obvious, but let's just state it to make sure it's clear.
Yeah.
Uh, so what they're saying is, hold on a second, our currency is being devalued, so let's buy something that holds its value independent of what we might mismanage or manage.
That is part of it. There's no
Yeah,
question, Arthur. That's part of it. The other part of it is, and say it another way, gold's a bad or the dollar's a bad investment.
yeah.
Okay. Those are holding it are losing purchasing power over time. If you hold gold, it's proven to be a store of purchasing power. It's a great hedge against inflation. It's a fantastic vehicle in deflationary times. And it is the uh, the money of choice for governments that are worried about a weaponized dollar as the world's reserve currency.
Hmm.
So, for all those reasons, along with safe haven flows, geopolitical concerns, social unrest concerns, you name it, gold is where people go to, and the central banks are leading the way there for the past few years, for sure.
Is there, besides China being so large,
Yeah.
is the US buying it? Central bank buying gold?
The U.S., to my knowledge, is not buying it, and they have not been buying for many, many years. Of
Yeah,
course, their gold reserves, and some people will doubt they even have them. I'm not one of those. I believe we have our reserves, and they're 8,000 some odd tons of gold. All right, we are far beyond anyone who's even close to second in terms
yeah,
of gold ownership as a country. So, we have not been buying, but our gold reserves are well in excess of virtually anybody else,
yeah,
at least through official numbers.
yeah.
So,
That's good to know.
so the reason we sell gold, the reason, people ask me what I do for a living, I usually tell them I'm an insurance salesman. Right. So you buy protection for your home insurance, you buy auto insurance, you buy health insurance. What do you do for your portfolio to protect it? And wealth insurance for me is gold, and it's defined as the store of purchasing power in a liquid form for a potential financial crisis you hope you never have. Okay. And a great example of that wealth insurance for a portfolio is take a look what happens every time there's a major stock market pullback. Okay. Look at Bear Stearns, AIG, et cetera. When these companies failed, the stock market plummeted. And what did gold and silver both do immediately? They plummeted as well.
They went down.
Yeah, because
Yeah.
everybody was mortgaged to their hilt in their portfolios, right? And when the value of their stocks went down, they had margin calls because the value of what they owned was less than what they had taken out and
Yeah.
borrowed against, right? So they needed liquidity. They immediately sold their gold and silver, two of the most liquid assets on earth, met their need, and then bargain hunters swooped in and started buying up the cheap gold and silver because it fell when it shouldn't have. And you'll see that it typically gold and silver will come down when the stock market comes down, but then it will go up immediately. And the stock market will tend to take time to recover.
Is that
Okay.
correlation pretty historically accurate?
Yeah, to go back, look at any major pullback in the market, you'll see the same type of phenomenon typically.
Yeah.
It's one of the most liquid things on earth,
Yeah.
gold and silver. Okay. So that's what I believe you use it for. And that's what we sell it for. However, what may surprise some people is this next slide. Um, since the beginning of the millennium, so we're talking, we're in our 25th year now, nearly a quarter century. The Dow, the S&P and the NASDAQ, as you can see, are up 295.1, 316.5, 376.7%. It's fantastic returns over the 25-year period. But silver, 505.8%, gold, almost 900%. You're never going to hear about this on the mainstream media.
So
Not ever.
why is that though? I mean, there was some volatility over the 25-year period in every asset class.
They both have gone up, they both have come down.
Yeah.
But long term, because of, remember a few slides ago, if you want to know where gold price is going, what do you look at? The money supply,
Yeah, the money
right?
supply.
Look at what's happened to the money supply in the past 25 years, really after the great financial crisis and after COVID.
Yeah.
Look at the spikes in the money supply, the expansion of the money supply. And there's the reason that gold and silver are outperforming equities markets over that time period. This is kind of a wake up call for a lot of people. They don't understand that so far this millennium, gold is by far the top performing asset, more than double the next best equities market.
So, Rich, I don't
Yeah,
mean to jump ahead, but can I just jump ahead for a second in a fashion?
absolutely.
So, people who have variety of assets, liquid, non-liquid, have a wealth management account with Goldman or Raymond James or something like that.
Yep.
They often are self-hypothecating. In other words, they can take their bond portfolio and take out a mortgage, right, at
Yeah.
nominal interest rates because they're letting the bank hypothecate their money on a nightly basis, right?
Yeah. They've
So
got
there's
collateral.
because of the system, there's some advantages to having large deposits with financial institutions like that have balance sheets.
Yep.
Have you found an argument against gold would be that you can't hypothecate this in the same way?
It could be. I tell you, there's a lot of people out there right now um, trying to find the way to let people borrow against or earn interest on their gold holdings.
Yeah.
Okay. My biggest issue with the latter, earning interest on your gold holdings is basically what you're doing is, like you said, you're hypothecating, you're giving it to someone else so they could use it as if it were their own, but not their own,
Right.
until you need it. And in the meantime, you get paid for letting them do so. Um, what are the protections that ever comes back to you? And those are my biggest concerns. The,
Yeah.
the beauty about gold is it's not managed, it's not mismanaged, right? It's nobody else's liability. You own it, and it is what it is. And I kind of love that. Before I can wrap my arms around a program that pays interest, I got to feel comfortable that the underlying asset of my client is absolutely protected. In terms of the former, the drawing interest on, or no, sorry, taking collateral loan against your gold or your silver. There are programs out there, and I haven't found one where I like the interest rates yet.
Yeah.
Okay, for what's standing behind the loan, I don't think we're getting enough respect, if you will, for the
Yeah.
gold. I'll keep, if it's of interest to anybody, keep in touch with us. And I promise you, as we see something, there's one on the development. I don't want to throw it out because they're not there yet. But if it comes to be, it's definitely going to be my choice.
Yeah, and the same subject matter, if you don't mind me throwing one
Yeah,
more thing in, because I've been exposed to this, is that the big, and my friends at the big banks aren't going to like this, but so be it. Uh, you know, if you're a client of UBS and the UBS says, yeah, we can buy gold for you and keep it on the banks, whatever, however you're going to buy it with them, you end up being subject to the claims and the creditors of the bank. It's not
sure.
right. And so what I learned is that you don't buy it from them because they have no other way of doing it than being subject to their credit quality, right?
Yeah. So in that case, and I'll talk to this in one of my later slides.
Okay,
How do
well,
you hold
we
your
can skip
goal?
it for now, but I just thought about it, right? Yeah.
Just keep in mind when we get to it, I talk about the two-step, and there's a reason I don't go to the product that I'm pitching today first.
Yeah.
I go there second because of what you just said. The first step is take delivery and hold it in your hot little hands.
Yeah.
There's no question, there's no claim. I have it,
Right.
right? The second step, because there's only so much you can hold, safeguard, and secure yourself, got to go in the hands of the professionals. And when you look that direction, I think the product I'm talking about today should be the first step.
Yeah.
So, but I'm going to get back to that. I'm not ditching it. So if I've made the case, I don't know if I have or not, show of hands.
Let's
I don't
just say
see
that you
any.
did. Yeah. Yeah.
So,
Yeah.
uh, so let's talk about what your best option is for owning gold, silver, and platinum. And for me, that's the Perth Mint Certificate Program, and it's gold you can fold. Okay. Um, it's a great program. They came to us right as I joined the company back in 96. And they basically said, we have a couple problems because they knew Glenn and Michael's background. They've been doing this since the 60s, early 70s. They said, listen, we have a couple problems we're wondering if you can help us out with. The first problem they had is they're an Australian-based company, the Perth Mint. They're on the left coast of Australia. They wanted to compete in the U.S. That's where the money is, right? They want to compete against the American Eagle coin program. But a problem is Americans buy American, right? So the kangaroo wasn't going to hop in and take over. The second thing they wanted to take care of was the high leasing costs. And you're probably thinking to yourself, why is a mint paying leasing costs to borrow metal? And here you have to understand how mints work. Every mint is the same. If let's say Arthur, you're a wholesale distributor, source distributor that buys direct from the mint, you're the people I buy from to sell to the retail public. Okay. So when you're coming into the mint, you say, listen, I want to buy Perth, I want to buy 10,000 1 ounce gold kangaroos at a pop, 10,000 ounces of gold, minted into coins. You work out a deal, you set a price, and you go ahead and you transfer funds. Do you want Perth to send you those coins right away so you can start selling them and make your money back, or do you want them to start making them?
Make them.
Well, you want them already made, right?
Oh, I
Uh,
see. Yeah.
yeah, you want them
So,
already
all
made. You
right.
want
So
them
they
to
have
ship it out right
inventory.
now.
So they
Where
have
did they get
inventory. Okay.
10,000 ounces of gold ahead of time?
Yeah.
Not knowing you were going to call,
Yeah.
right? So what the mints do is they borrow the metal, they lease it from the bullion banks. So the bullion banks hypothecate the gold, right? They send 10,000 ounces to Perth. Perth makes it up into coins, bars, all the stuff that the world might need, and they have it sitting there ready, collecting dust in their vault.
Yeah.
And then Arthur calls up, buys 10,000 ounces of kangaroos. They agree to a price. They buy 10,000 ounces more off market, ship the coins out the door, and start making 10,000 coins again.
Yeah.
Okay, that's how the business works. And that was a problem because those leasing costs are very high. They're volatile, they fluctuate, but they tend to be very high, and it's a major drag on in your overhead. So what we suggested, well, we'll go the other direction. How about what we suggested for the first problem, competing against the Eagle is what we call an end around, if you know that football term,
Yeah.
right? So instead of going directly at the Eagle, we went around it. We said, listen, if we help you design a unique program that no one else in the world offers, to this day, 28 years later, still the only one in the world, in this case, a government guaranteed precious metal storage program, only one in the world today. If we suggest something that nobody else offers and the world buys into it, only allow Australian product in the program. You can't move in kangaroo or eagles. You can't move in maple leafs. You can't send bars from Credit Suisse. You have to put Australian product in the program. And that's kind of the end around. And people have bought into the concept over the past 28 years, I can tell you, to the tune of billions of dollars. So the second thing was to go after the leasing costs, right? Now, they wanted us to eliminate the leasing costs. Of course, anyway, we want to get rid of costs completely if you
Yeah.
can. That was not possible, but we were able to severely reduce them. And what we said is, let's get rid of the bullion banks. If I bring you a client who doesn't care what form their metal is in from day to day, so instead of, now they can do this as well in the program. You can have them mint, 100 gold kangaroos, put them on a shelf with your name in it, and you'll pay an ongoing storage fee. You can do that, and you'll pay the fabrication fees to make the coins up front. You can do that. But if I bring you other clients and say, listen, I don't care what form it's in, as long as you can guarantee me that my ounces of gold or silver or platinum are always 100% backed on premises under your control and unique to me.
Yeah. So you own them through the
If you can
process,
guarantee
right?
that they will never
Yeah.
be used as backing for derivatives,
Yeah.
if you can guarantee that you will never lease my metal to a third party, and if you can guarantee that you will always back it 100% with full insurance at full market value at all times at your cost, if you do all those things, I don't care if I own a kangaroo, part of a bar, or anything else, as long as you meet all those other criteria. So we said, then if I bring you those clients, reward them by not charging a storage fee. So two things, you're going to get two savings here. You're not going to pay for fabrication because you're not telling them to make it into this, that, or the other. If Arthur has 100 ounces at Perth, it could be one day 100 kangaroos. Another day it could be a 100-ounce bar or 3-kilo bars or part of a 400-ounce bar. But it's always going to be 100% backed, unique to Arthur. It's always going to be on premises, never leased to a third party, never used as backing for derivatives, always insured at full market value. And we said, but reward them by not charging that storage fee, not having them pay a fabrication fee, right? So they agreed to that. Now that savings for the Perth Mint is about 0.5%, or for the customers, about 0.5% per year. That's typically what gold storage is going to run you at a top flight institution. So you're saving 0.5% per year, but it's costing Perth that. Those are real costs they have, right? They have to pay for the insurance, they have to house the metal, et cetera. They have to secure it. So they have real costs. It's about 0.5%, and they're giving it up because those costs are cheaper than the leasing costs they were paying the bullion
The
banks.
bullion
So
banks.
we changed the leaseor from the bullion banks to you.
Yeah.
Okay. And in so doing, we lowered Perth Mint's operating costs severely. And they've been working at that advantage over virtually every other mint for 28 years now.
Wow.
It's one of those win-win-win situations. They get to save on leasing costs and lower their operating costs, and have metal built up ahead of time for the world to come calling to get it. We get to make this offer to our clients. We offer gold, silver, and platinum cheaper than they can get anywhere else. There's no fabrication fees, no ongoing storage fees. They get a government guarantee. I get to offer that to people, and you get to buy it.
Yeah.
So it's one of those great situations. And that's how we solve the problem. And what you got for that are what I call things that are too good to be true, but true. Typically when something's too good to be true, run away from it. It's a
Yeah.
lie. It's a
Yeah.
scam. In this case, Perth is too good to be true, and it is true. The naysayers or the critics will say they can't do that. They can't not charge storage fees because the only way they can do that is if they don't have the metal. Not true. They can do it. It does cost them money, but it's a savings versus their previous business model. Okay. So you get extremely low premiums. You get 100% physically backed metal on premises. It is unique to you. There is no leasing to third parties. There's no derivatives exposure, 100% insured at full market value, no storage fees. And I asterisk that because that's on this unallocated storage that I just described. If you buy fabricated metal that you put on a shelf with your name on it, you will pay an ongoing storage fee. But if you own it this way, there's no storage fees. World's only government guaranteed program. We've been putting it in IRAs since 2001. Gold, silver, platinum are available, and you can buy, sell, store, and delivery. So unlike an ETF, you can say, you know what? Take my 100 ounces of gold, make them into 3 kilo bars, and ship it to me in New York.
So
Okay.
when you do that, Rich, just to be clear, then you
Yep.
have to pay the
You pay the fabrication fee and the delivery charge.
yeah,
So typically what we do, and we've had a lot of clients do this, if you look at economies of scale, the more you do, the more cost effective it is.
right.
I had a client take delivery of 40 some odd kilos, right? So each kilo is $80,000 or whatever right now. 40 kilos were fabricated and delivered to a bank in his name in Switzerland. Okay, I had a client do that. And that made perfect sense. For someone who's got like 10 ounces, I wouldn't do that
Yeah.
because it's not going to be cost effective to do that armored secured shipment overseas for 10 ounces per ounce, right? So instead, what I'd probably look, and we do the numbers ahead of time and say, listen, sell it, right? And then we'll repurchase the gold on this side already fabricated and they'll deliver it in the States.
Yeah.
Uh, so we'll look at whatever's the cheapest option. That's part of my job. That's what our expertise is to get you most cost effectively and efficiently where you want to go with
Yeah.
precious metals, right? So we can help you work through that. But that was a great question. So I told you we'd get to the two-step, right? So this is not a cowboy dance, all right? So the two-step is when I look at storage, I will tell you as I'm sitting here that the Perth Mint Certificate Program to me is the most cost-effective, safest option for owning gold, silver, and platinum, period, full stop, bar none. But it's not the first thing I do. First thing I do is I take delivery of my metal, okay, to a point. And we talked about this a couple of weeks ago. I take as much metal as I feel like I need to bridge a short-term gap for those any unforeseen crises that I don't ever want to have, but I might have. And I don't want to ever hold more than I'm comfortable safeguarding and storing myself because it's the cheapest option until it's lost or stolen. Then it's the most expensive option,
Yeah.
right? So I always take delivery first. And then once I hit either one of those thresholds, now I'm looking to third-party depositories, typically not a banking relationship, in my opinion, because when everything goes hell in a handbasket, dollars in trouble. Are you getting into Silicon Valley Bank to get your gold out?
Right.
Right? No, you're not. Okay. So the bottom line is I rather go to someone whose job it is to be a professional safeguard of my valuables. And we know plenty, both domestically and abroad. My first one is going to be Perth because there's nothing cheaper, there's nothing safer. Right. So you talked about, getting in line with creditors. Now, this is another asterisk. With unallocated metal at Perth Mint, technically, something happened to Perth Mint, you're in line with creditors. But here's the difference. This is a completely government owned and operated mint. The state government of Western Australia completely owns and operates the Perth Mint since the 1800s. Okay. For the Perth Mint to fail and not be able to stand by its obligations, the state government of Western Australia needs to fail and the citizens have to refuse to bail it out, which means they go kaput, right?
Yeah.
It's not going to happen. Sovereign governments are not going away.
Right.
Okay. And in this case, the Western Australian government is actually very resource rich and AAA rated through Standard & Poor's. So the bottom line is they're a profitable government. Okay. Unlike most governments in this world today. So good partner to be working with. I don't have a problem with that as a stipulation, knowing full well that they're only holding metal that's 100% backed and unique to me in their control, no derivatives, no leasing, 100% insurance at all times. So I feel like that's the safest situation that's available if you've got to have somebody watch your metal for you.
So the
Okay.
insurance won't cover a default, meaning a folding of the Perth Mint or the credit quality being radically depressed of the state government. It covers theft and fire and all that kind of stuff, right?
Yeah, it's not going to have a force. I think there's a force majeure clause.
Yeah,
If like
right. Yeah.
a gaping hole in the earth, swallowed up the Perth man, I
Yeah,
think
yeah.
you're out of luck. But we have
Yeah.
bigger issues.
Yeah.
So Yeah, the bottom line is I'm comfortable, and it can change, but it hasn't in 28 years. They're insured through Lloyd's of London,
Good.
and that's where all the metals companies go to. They're the folks that are best at what they do. So the other thing I wanted to touch on though is the stability of this program, right? Yeah. So when I look at gold, you can fold. I already talked about the fact that it's your second step, but I want to talk about two other things, and that's supply squeezes, right? Because there's a lot of talk right now about London being squeezed because they sent all this metal to New York ahead of the tariffs that President Trump has promised, right?
Well, that's
So
news to me, Rich.
okay, yeah. So this is a big thing right now. Everybody's worried that London doesn't have metal to deliver if asked, because they've been delivering it to New York for weeks now in fears that Trump is going to put in some tariffs and that metal is going to be more expensive to get into the U.S. in the future. So they're moving it all here now, right, ahead of the tariffs. So that potentially could hit a supply squeeze. And as you know, anytime a lot of people want something and there's very little of it to get, the premiums are going to go through the
Yeah,
roof.
free markets is a good thing.
It
Yeah.
could be gold, it could be toilet paper in a
Yeah.
hurricane, it could be anything,
Yeah.
right? The last time, well, we've seen this a few times. 2021, you remember Wall Street silver? They were trying to corner the silver market.
Yeah.
And, in a few days, they ran the price from like, 17, $18, I think, up to near 30 or whatever it was. And a few days later, it was right back down where it was again. But that was a short-term supply squeeze. We saw the same thing during Grexit. We saw the same thing during Brexit. Anytime there's some sort of panic and everybody wants minted material right now, then the mints have only been making so much. There's only so much fabricated coins and bars available. It's not like we ran out of silver or gold. We ran out of silver and gold in the form that everybody wants it. So in those cases, I mean, we can see, I've seen silver eagles, 1 ounce coin in the US. I've seen them go from a normal premium of around 15, 16% over spot for a 1 ounce silver coin to 60%, 60% premium in a supply squeeze. At exactly the same time as people were going to pay 60% for a silver eagle, how much do you think they were paying at Perth?
Yeah.
Two
Nothing.
and one quarter percent above the spot price.
Yeah.
That's how
Yeah.
much it costs to buy gold, silver, or platinum at Perth.
So
Full
how do
stop.
they manage that?
Well, again, we're not taking delivery of a coin or a bar. That's what's in short supply during the squeeze,
It's
not silver.
it's
There's
in the
plenty of silver.
form of for which the demand existed.
They have plenty of silver, so we're not running out of it,
Yeah.
right? So they haven't moved those premiums. It's been the case. You pay 2.25% to buy in. You get paid 1.25% below spot to sell out, 3.5% round turn, and that hasn't changed. Doesn't matter what chaos is going on in the world outside, those premiums have been steady for years and years and decades. Okay. And it's because there's enough in there for the dealer, myself, and Perth Mint to make enough profit.
Yeah.
And that's it. You don't need
So
to make an unreasonable profit.
yeah. Um, so does Perth Mint also, and I don't mean to confuse the situation, but are there mines in Australia that can thwart any supply squeezes from the raw material, or is it largely coming from somewhere else?
In Australia and elsewhere.
Yeah.
Perth Mint is one of the major refiners on this planet.
Yeah.
Yeah, so they don't have any problems with supply. More than enough to meet demand because remember, gold's cheap and hated.
Yeah, right.
And silver is even worse off right now. It's only what about at $32. It's like or 60% of its all-time highs at 50. So it's even cheaper and more hated.
When was 50, Rich, about?
Twice. So January of 1980, during the first bull market, and that run had to do with the Hunt brothers and some Arab sheiks that were trying to corner the market, and then the government changed the rules on them, made it a liquidation only market. The only place for the price to go was down. So I think that was actually an aberration. It was higher than it probably should have been. But $50 in January 1980, and then in April of 2011, that was the 49, $50 was the peak of the last bull market. And I think that was more true in terms of supply demand statistics at that time frame. I think I shared with you last time because of that 45-year cup and handle formation on silver
Yeah.
that I think this time around we're looking 90 to $100 before we're done for silver.
And when you trade in with Perth, are you trading in US dollars?
Yeah, so you would work through us, a U.S.
Yeah.
dealer,
Right.
and we would make all our buys and sells with Perth through dollars. We pay their U.S. dollar correspondents. We receive funds from their U.S. dollar correspondents, so no problem. You don't have to do any conversions, et cetera.
Does your firm accept digital currency in payment or no?
We don't. We
Yeah.
don't. And honestly, we don't because, maybe I'm just boring and stable, but, when I bring that in, I'm introducing volatility and something else to manage. And every dealer I know that does allow people to pay in crypto, they immediately sell out of it once they
Liquidity.
receive it.
Yeah.
They
Not only that, you
immediately
pull
do. So it's
yourself
just one
into,
more thing to do.
yeah, and you pull yourself into money laundering issues, right? So,
Potentially,
yeah,
potentially.
actually, yeah.
So the second thing I was going to say, and it may not pertain to everybody in the family office world, but if you're looking at IRAs in the U.S., one of the neatest things I can do right now for clients to help them succeed, because if I see that potential in silver, is if they've got an IRA that's a Roth where they don't have to pay anything on the profits in the end. Oh my gosh. Own Perth Mint certificates, 2.25% above spot, no ongoing storage fee in a Roth IRA and laugh all the way to the bank.
Yeah.
So it's one of the neat things you could do, but that really doesn't pertain to family offices.
Actually, it does, and I'll tell you why.
Okay.
There's been a lot of smart people who started companies. They took their IRA, they took a small chunk of it and converted it to a Roth, paid the tax, bought shares in a startup that they founded. I mean, there's
There you go.
attribution you have to do. You have to do it the right way.
Yeah.
And those shares then became the company that was worth $1 billion that they never paid tax on.
Beautiful.
So, and this is not, it's complex, it's legal. If you do it the right way, it's illegal if you do it the wrong way. Um,
Yeah.
but there's a lot, I happen to know as a percentage of the cohort of people in this family office insights world, there's a lot of people that have leveraged that. And so
Yeah.
but
Well, just
people
shave
don't,
a little off of the top of those profits and put it into silver, and I think you're ready
it,
for a little bit of
I
a
think
moonshot
it
here.
makes sense because what
200%, I think, possible.
the other thing people don't realize is that you don't have to convert your whole IRA. You can convert a piece of it to a Roth,
Yeah.
right?
Again, remember, so last time we talked about what I believe, and that's 10% in gold of net worth for insurance. And then when you're looking for profit, gold and silver, but maybe another 10 to 15% of investable assets. And I weight that towards silver. So we're not talking a big portion of the portfolio.
Yeah.
If you look at the overall net worth, it's probably somewhere between 15 to 20% when you're invested for profit, right? And most times you're not. But in this environment, I think you ought to be.
Yeah,
So,
that's a good point. We talked about that in detail last time, and it's super enlightening because gold maybe primarily store value, silver opportunity to invest for profit now, right?
yeah. So I left
Yeah.
this up a little bit. So this contact information, by all means, reach out to us. The last thing just want to leave you with, and then we'll just switch to all questions is, our motto is keep what's yours. And this is not about hiding stuff. This is not about, secret bank accounts in Switzerland or anything. When
Yeah.
we mean by keep what's yours is we're talking about protecting that purchasing power. And it's what we believe gold does for your portfolio. So the best way I know to keep what's yours, to hold that purchasing power that you have now, 10, 20, 30 years from now is through gold. It's proven itself for 5,000 years now. I kind of look at it as, you take your purchasing power right now, and by putting it into gold, you're cryogenically freezing it,
Yeah.
right? And then whenever you come back later and you thaw it out, you're going to buy the same number of goods and services as used to. And that may not be sexy for a lot of people, but when you look at a 99% drop in the dollar's value in 110 years, you know what? It's pretty darn interesting.
Yeah.
So for what it's worth,
Yeah.
that's what that motto comes from. That's what we're all about. That's why I'm an insurance salesman
Yeah.
with
I love
gold.
it. So
So
if you look at the history and you look at performance and you look at something you can actually see a track record, and then you look at people who would talk about Bitcoin as a store of value,
Mhm.
which you really can't apply any traditional finance against, right? Because, even though people are hypothecating it and
Mhm.
lending against it, and you know, let's just take the Bitcoin maximalists. They're not ever selling any of their Bitcoin. Forget about MicroStrategy and all those guys because that's a
Yeah.
different play. How, when, Have you had the conversation with your customers when they say, well, wait a minute, uh, I've got Bitcoin and I know that it could blow up and go zero, and gold's not going to do that. So you got a point, but the the chance of Bitcoin, who knows what the probabilities are, but I want to make that bet. Do you just go back
Well,
and say,
and
go ahead,
and
both? Right?
therein, you just proved the point that Bitcoin right now, I don't know what's going to be in the future, but right now it's a speculation because
Totally.
I want to do that,
Yeah.
right? So I'm not an asset manager, but everything I've ever read or what I do myself is if I have something that's a speculation, what does that mean? Because the most important thing in managing your portfolio is managing the risk. It's not about what you can make, it's about holding on to what you got. Rule number one,
Yeah.
don't lose what you have, right? So the bottom line is by managing that risk, what you do is your position size. And if it's speculation, the riskier it is, the smaller the slice of the pie. For me, a speculation is no more than 1 to 2%
Yeah.
tops, tops,
Yeah.
right? So that's what I got in Bitcoin.
Yeah.
But I've got 10% insurance in gold plus a little bit more gold and silver for profit, because it's more of a stable asset.
Yeah.
It has proven itself over the long run. And I hope Bitcoin does too, because I own some. We talked about this last time.
Yeah.
Um, Great. But it's acting like a speculation. I position size it as such right now.
Have you had conversations with Bitcoin maximalists?
Oh,
I mean,
yeah.
do they even have the conversation with you like, maybe I should consider, because the maximalists, they're never selling their Bitcoin and they got rich on the Bitcoin. I mean, their wealth didn't even happen without it, right? And
Yeah.
I'm not saying that that's a bad thing. I'm just saying it's a reality. Many of them wouldn't have the wealth that they had it not been early adoption, right?
Agreed.
What's
Now,
what's what's their view?
so I've debated a lot of them, and
Yeah.
honestly, I like them, because Bitcoin right now, most of them are reacting to the mismanaged fiat government model. That's what Bitcoin is all about.
Yeah.
It is a reaction to mismanaged fiat currency, and I agree. That's
Yeah.
why I love gold. Right? It's the same exact mindset. So I have no problem with that. And a phrase one of my best friends, Erica, says all the time is, come for the Lamborghini, stay for the revolution. Right? And she's talking about a revolution in money.
That's great. I love
Right?
it.
So
I'm
so
not buying the Lambo because I'm way beyond that. Like that doesn't do it for me. But
but a lot of these folks came in, and and when I started talking to her, we were debating. She was on the crypto side, I was on the gold side, and we've done this many times throughout the years with all of her friends, and we all end up in the same place. It's not either or. This is not zero sum.
yeah, totally.
Own both. They're doing
Yeah,
different things,
yeah,
but they are similar in that they're a reaction to mismanaged fiat. So why not hold both?
yeah,
And most of them love and hold gold as well as crypto.
yeah.
So for what
Is,
it's worth.
is she a maximalist? I mean, is she all
Yeah.
in on Bitcoin? Yeah.
Yeah, there's no question about it. And I'm the same way. It's like, early on, that guy spent what, I don't know, 12 Bitcoins to buy a piece of pizza or
Right.
buy a pizza. Boy,
Yeah.
he wishes he had that back now. So Bitcoin, it kind of acts the same way that gold does. In that when I have gold, the last thing I want to do is spend it,
Yeah. Right.
right? When I
Yeah.
have Bitcoin, the last thing I want to do is spend it. They're very similar in that regard.
Yeah. It's super interesting. That would be a fun point counterpoint discussion, right?
We
Uh,
have a lot of fun with it, and everybody wants us to say, okay, so what's the verdict? Are you going to own gold or are you going to own Bitcoin? And
we're
we
gonna do
all
both. Yeah.
both.
Yeah.
And why wouldn't you?
Yeah. We're
So
doing a panel where I'm considering doing a family office that has all in, didn't make their wealth with Bitcoin, but all in on Bitcoin, right?
yeah, yep,
Maybe crypto, to somebody who says absolutely no way, no how. And then, do a panel discussion at a conference that I'm
Yeah.
hosting one of these things at doing that. But this sounds like it could be fun too. Yeah.
Usually the big one I get is they try to throw in the zinger. What if we get hit with that, golden meteor? And then all of a sudden the price of gold is going to go to the floorboards. I'm like, if this Earth gets hit with a golden meteor, don't worry about it.
Yeah.
We're not here.
Yeah. Is
Stand
that a
your
real
ground.
thing?
No, I don't think so. I
Yeah.
don't. So, but they like to come out with that.
How
So,
about the mining of the asteroids? Is that a real thing?
possibly could be someday. I think we're a long way away from that.
Yeah.
I don't think we're going to see it in our lifetime,
Yeah.
unfortunately. So,
Yeah. Probably not. Yeah. Well, again, this has been super, really interesting digging deeper on this. And
yeah, no
uh,
worries.
I have much better understanding now with the Perth program. So, and I'm sure everybody else appreciates that as well.
Yeah, well, I wanted to bring this out because it's a unique product. Again, it's not the only thing we do. If people want the physical coins or bars, we can deliver that. We can store it for them as well. But this is it's a neat program. I don't know anywhere you can buy it as cheap, sell it back with as round a small round turn between your buy and your sell.
Yeah.
You don't have to worry about the premiums. You don't have to worry about the middlemen. We've cut all them out. You have no ongoing storage fee, which is usually the big thing. We talked last time about what's the drag on gold
The other
long.
friction, right? Yeah.
That drag is typically that storage charge,
Yeah.
but at Perth you don't have it,
Yeah.
not a penny. I mean, I've held gold there for 28 years and not a penny in
Yeah.
storage.
And so if you're buying let's say $250,000 worth of gold and you want to store it with your folks, you're saying it's about what percent at that
So
number?
yeah, you'd pay 2.25% above the spot price, and
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 then
that's
to
the
store
same
it?
and stored, etc. I mean, that's it. You'll
Oh, I
pay.
see.
You have to pay a $50 certificate fee and $10 for us to ship the certificate to you, certified return receipt. I mean, so 60 more dollars.
So the two
It's
and
yeah, it's immaterial,
yeah,
any marginal
cool.
costs. So,
Yeah,
but yeah, and then when you sell it back, you get 1.25 below the spot price. So your round turn is 3.5%.
yeah,
Compare that to anything you're going to buy physically when you figure shipping it back and forth to the dealer or depository, the ongoing storage fees, et cetera. You can't come close to this product.
Listen,
So
we encourage everybody to talk to you if they're considering any of this,
yeah,
but please share with the group because I think it's super instructive. The number one question they should ask anybody who's they're
yeah,
considering buying
yeah.
gold or precious metals from, and that if they don't
Thank
answer
you.
correctly, they should run for the door, right?
Thank you. I'm glad you brought that up.
Yeah,
That's my pet peeve. So,
yeah,
the bottom line is if you're looking to buy from us or anyone, precious metals, before you say yes, ask the dealer this question. When I am ready to sell it back, will you buy it from me? If the answer is no, run away. Do
yeah,
not buy anything from them. And you'll be surprised how many times you'll hear no, believe it or not. And the reason for it is very simple. I usually tell people there could be two reasons. First reason is because they don't value it. Well, if they don't value it, they shouldn't sell it to me. They should just give it to me, right?
yeah,
Because it's
yeah,
worthless.
right.
But they do value it. So the other reason is they're embarrassed about the price they charged you when you bought it from them.
Yeah,
Because if they bought it back and they had to pay what the market would bear, they would expose the wide margin that they charged you, right? And how they took advantage of you, basically. So nobody regrets or begrudges a reasonable
yeah.
charge.
Everybody has to make money,
Yeah.
right? Yeah, yeah,
But the folks that won't buy back aren't buying back simply, no matter what they say, they'll tap dance and sing a song or whatever. But the only reason they won't buy back is because they charge you too much and they don't want to expose what they did to you. So don't ever buy from someone who won't buy back. Everything we sell, we buy back.
yeah. So this is probably not a fair question, but in the universe of people that are out there doing what you do, some not well, some really well like you, some, in the middle, are half of them not buying it back?
Oh, honestly, I don't know.
Yeah.
But what reason I say you'd be surprised is I go to shows and I go around and I ask the questions. I
Yeah.
mean, I know the competition, and I hear the songs and dances. So yeah, do ask that question. I do ask the question. I went to one show about 4 years ago, and I said that thing. I stomped my foot on the stage and said, "Don't buy back if they won't, or don't buy from them if they won't buy back." And you said, "You promise me, you forget everything else. You won't forget that, right?" And guy comes up to my booth the next day. He goes, "Hey, check it out. Look at the coin I bought from another dealer on the show." And I'm like, as soon as I saw the coin, I knew what it was, and I knew where he bought it, right? And I said, "Okay, Grant, got it. Did you ask that question?" He's like, "What do you mean?" I'm like, "Did you ask the question? Will you buy back?" He goes, "No." I'm like, "Why didn't you?" And he says, "Well, because, they're here, et cetera." And you can fall into that trap. I think it's unfair for the folks that run this show or that trade show or whatever to know the business dealings of every single person that comes on their floor. It'd be great if they could. I don't think it's possible.
Not
Uh,
possible. Yeah.
but a lot of folks say, well, they're here, so they must be all right.
Yeah. Yeah.
Not always the case.
Right.
Ask that question, please ask that question. Because I said, listen, if you would ask that question, I think you wouldn't have bought the coin.
Yeah.
Because I knew the
You
answer.
knew the answer because you knew who
Yeah.
you were. Yeah.
I like asking questions I know the answer to. Makes me feel
Yeah. Good
uh,
lawyer part. Yeah. It's good military training, right?
yeah, exactly.
Yeah.
So
Well, this has been super great once again. I really appreciate it. Um, the we're gonna make sure everybody gets in touch with you and vice versa and post this recording and so forth and work with you to make sure everybody gets a chance to share it with others and that it's been really, really a treat getting to learn along the way as well as sharing this with the community. So thanks, Rich. Really appreciate it.
thanks for having us. We look forward to getting to know your community better over the years. I hope this is the start of a long-term relationship. So
Yeah, me too. Appreciate it. Okay. Thank you, everybody, for joining today. Like I said, we'll put everybody in touch. And as I always say, thank you for sharing with us the only thing you can't make more of, and that's your time. Till next time. Thanks, Rich. Really great.
thank you.